This is your end of week market recap for what is today? I know today's Friday. It is the 19th of April. As always, these end of week recaps, what I will do is break down the market performance for the week. Also talk about obviously today's price action because there was definitely a lot of things going on today, and then we'll talk about themes and some standouts both to the upside and to the downside. And I think that there were some standouts today. You could see from looking at the over here on the left, the performance for the day, which I always have sorted by percentage change from the open, because I want to know where the strength weakness was for the day. And I think there's two areas that really stood out, one on the upside, one on the downside of where there was strength and where there was weakness in this market today. So overall, look at what the Qs did today. I cannot believe what the Qs are only up. If you go to the right over here, they are now only up I think it might be 1.4%. I just double checked the math. But regardless, 1.3, 1.4% for the year. Wow, that's different than what we saw from about a month ago. SPY is still up 4.2%, and that's now leading the way. Mid caps are in there too. They're up 2.1%. Look at the difference between the mid caps and the small caps. Interesting too that the biggest weight in the IWM which was one of the biggest losers today, which was SMCI, was down like 20% today, and that's 2% of the small caps. Now, 2% is not a big weight overall, but you've got 2,000 names in that ETF, and I just found that's pretty interesting. When you look at, let's just bring this up so that you can see it for yourself, so that I'm not making up things. But there it is, Super Microcomputer, which is now, it's funny because this is now in the S&P, right? So why is this name now I believe it's in the S&P now. Why is this name in the S&P 500 of large caps? And why is it still in the small caps? Well, because there's different fund managers, right? So the S&P just added Super Micro, I think a couple weeks ago or like a month ago. I don't know. I forget the date, but regardless, so that's been included. That's Standard and Poor's. This is the Russell. They only do the rebalance once a year, and they will probably, I would assume, take this name out because it's no longer a small cap. But they don't just do that on the fly. They only do that rebalance once a year, and that rebalance hasn't occurred yet. So just very interesting. You could see the weight there is 1.9%. By the way, risk disclaimer in front of you. Everything that we're going through is for information purpose only. Not giving any advice or recommendations. Please read the full disclaimer there. And thank you for joining me. By the way, it's been one heck of a week. I will go through obviously however you want to classify it. We're in definitely a market dip. Speaking of the Qs, down about 7% for the week, right? And correction. I know some people have that formal term of what a correction is, which is down 10%, but I don't really like those. I don't really like to label it. Clearly another thing that people like to label is bear markets and bull markets, which I think is kind of is not my thing either, rather than give it a bad adjective. I think from time to time the market exhibits bullish behavior and it exhibits bearish behavior. And I would say over the last couple of weeks, we have been dealing with more bearish behavior, right? Again, not a bear market, but bearish behavior. For example, right? We know that a lot of breakouts have been failing, right? We know that a lot of up moves have been faded. I'm going to talk a little bit about that. I'm also going to kind of give you a little bit of a guide that I use. And I talked about this in yesterday's video, which was a member video, but I actually released it later at night publicly, just so that you can kind of use that information and hopefully it helps you a little bit. But when we start to break down like this, as we have been doing decently for the last week, right? This price action kind of came at you fast over the last week. But here's your breakdown. Now, when we come to levels like this, we basically want to see what's going to happen, right? A lot of times these blue lines, virgin point of controls, are where there could be potential demand. And same thing when they're above the price action, they're potential supply. But it really becomes a battle of buyers and sellers. And in this case, the sellers have won out over the last week. There's been a lot more selling pressure. Now, I don't know if that also has to do a little bit with, sometimes it's a combination of things. Clearly the move down in NVIDIA and SMCI had their own story today. But it's also like options expiration. Sometimes there can be more to sell for those weeks. This was not a rebalancing. This wasn't a quadruple witching, but regular option expiration, and maybe there was some net selling that had to take place for that. But here's where we are. The one thing, of course, like I rely on the value areas to basically tell me when something is trading in a range, trading uptrending, which is above when the price action is above the value area, or in this sense, we're downtrending. Now, of course, we're still up, we're still in an uptrend. I had a couple questions about this earlier. We do a Q&A every Friday, but I had a couple questions about like, oh, does this mean like the market's breaking down? No, in my opinion, it's not. I mean, it's just the fact that we are having a dip in correction, and you usually get, on average, 1 to 2 of those a year. So right now we're going through that. Sometimes they can be 5%, sometimes they can be down 10%, right? It all depends on the situation. There's no exact number for these things, and you have to watch price action and pay attention. And of course, I'm going to say this word probably a couple times in this video, but you have to be patient, right? You have to kind of let them work their way through, right? Unless you're really kind of playing things to the short side, and in which case you may really like the price action that you're seeing on the tape. But for now, we're way above the value area still for the year, right? That's another 8% down. And I'm not saying that price action, the price needs to come all the way down there, but just to give you a visualization that we're still uptrending. We just, are basically taking a break as we did multiple times last year too, right? Where we descended down. So another thing to note, so I use, a couple different time frames. I use the weekly, I use the daily chart, and I also use the 1 hour and 5 minute when I'm day trading. But the 1 hour can really give you some good reference points. Before I switch over to the 1 hour, just want to make sure that one of the things that I've used over time when we're uptrending or downtrending. Now, of course, like back here, the 20-day moving average really came into play. Price was really observing that, or I should say, what's the word that I'm looking for? It was just really holding up well and honoring that 20-day moving average very well. We bounced off that several times. Now you could see, since we've broken below the 5-period moving average, right? We know, number one, when price is like this and trending down and can't get back above its 5-period moving average, we know that the sellers are in control and price is trending lower. And really, there's no point, in my opinion, to try to call or time when this is going to reverse. You just wait until price action is back above here. And I used to do this quite a bit, and I did this in yesterday's video. But what I'm referring to is, basically, it's just a very easy example of what happened back in 2020 with the COVID situation. I think I'm almost there, I think. All right. Yep. Here, we're almost there. Yeah. So here, this was to me, this was a similar situation, or just similar characteristics. I shouldn't say similar situation, because this was, there was lockdowns. This was a heavy pullback. And the more that you could stay away from, stay out of trying to time the bottom with this. And I remember, running the Tribeca trade group, I had many members back then who were trying to buy the dip all the way down. And I'm like, hey, you're not going to be able to, you're just fighting against the tide. Until price gets back above the 5-period moving average. Now, of course, so we had a little bit of sometimes we had a pause here. It was a bear flag, but so if you got fooled there a little bit, that's, in my opinion, okay. But this should tell you all that you need to know. Price is trending below the 5-period moving average, and every time in here, there was a couple times where it tried to reverse, but it could not get above the 5-period moving average until the selling pressure was over with right at the bottom. So there was very little confusion in this if you were just relying something like the 5-period moving average. And I'll tell you, it really helps when the market is trending either to the upside or to the downside, right? Because it's the same thing to the upside too. There are many that are going to want to say, hey, we're going up too far, right? And we saw that for a number of months. We saw a lot of traders say, hey, this isn't right, we're going up too far. Well, it doesn't matter about like being right or being wrong. It matters about it does matter about being wrong, I guess, because you don't want to stay wrong. But the object is to make money. It's not to say, it's not to predict way ahead of time to say, oh my God, this shouldn't be happening because of X. Da, 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 da. You realize when it does change. And then you could say, okay, does this make sense now that we're breaking down? Yeah, I mean, you can obviously come up with various different reasons. All right, I'm going to move on, but I just wanted to mention that how well that 1 hour, excuse me, the 5 period moving average, right? Now, another thing that I tend to look at is when on the 1 hour chart, um, you can kind of see what's going on here, right? On the 1 hour chart, is this just that we've been descending down. And here I'll rely on the value areas, and I'll also rely on the moving averages here. And you can kind of see what's going on here. Normally this thick line here, or not real thick, but a little bit darker line, is a 200 period moving average, right? Here's where that's usually the first break, right? Once we start breaking below this, right? And then you're going to see some attempts. Right. Here's one attempt, failed. Here's another attempt, failed. Then as price really started to descend down, now it becomes a different moving average. But you could kind of see, like, you don't have to go out on a limb here, right? Just looking at this 1 hour chart, you're like, hey, maybe we could turn the corner here. Nope, rejection. Maybe we could turn the corner here. Nope, rejection. Same thing here, rejection, and same thing here as well, right? And again, all this means is that for now, there's just more selling going on. Whether it's short selling, whether it's long liquidating, it doesn't really matter. What we're waiting for is, a turn to place more things to the upside. Now, of course, if you don't, if you want to try to go out on a limb without confirming with the price action, because I get that a lot of younger traders, a lot of traders who don't use technical analysis will just go out and start making predictions without thinking, oh my God, right? What did we hear? One of the things that I heard too last week, which again, I try to pick up on some of these signals too, but I heard, oh, it's tax, it's because of tax reasons, right? It's the 15th of the month, right? Well, that was last week. What was your excuse this week, right? Well, give us a story, right? Now, again, people love the stories. And like I said, it could have been a little bit of options expiration, but it certainly wasn't the tax situation because that was last week, right? And this was a big week down. So again, some of these things that you hear on Twitter, are not really that great to follow. The price action is the best thing, in my opinion, to understand, right? It's the same thing I talked about, the McClellan oscillator being oversold, right? You can get more oversold. It's the same thing on the upside. You can get more overbought, right? So the more that you are not paying attention to price action, the more that you can get yourself into trouble. Now, I started to mention, like, if you really want to, you could try, speculating on an option, going long a call or something like that, right? Reminder, that's what options are for. They're for speculating. Right? They're also for hedging too, but speculating when you just want to take a shot at something, right? People forget what options are used for. People think it's, oh, every time they see an order on the tape, it's, oh, they know something. A very small percentage of the time that's actually the case, especially if you've been paying attention to option flow for a long time. All right, so let's get back on track here. I thought that this was kind of interesting for the week. Oh, I don't have the Dow in here, but the Dow actually did okay this week. The Dow was actually flat for the week, right? I think I have this over here, which I'm happy to bring in the performance for the week. And I actually put this in a different color just so it would stand out. But there were some things that actually did okay this week. So do we want to talk? I've already talked about some negative things, so let me talk about a little bit about the positive things. Look at what the banks did this week. I was very impressed. We caught this AXP in the not AX, sorry, not AXP. I want to talk about that stock too. Sorry, it's been a long week. I caught Wells Fargo. This was kind of funny because I noticed this chart last week before they reported earnings. And I said, geez, that's really interesting because the price action is super tight like this, and it's going to break one way or another. And when they had earnings, and I think the initial reaction on earnings was down, I believe. So I'm like, okay, this consolidation, notice how the price action was staying inside the value area, but I'm like, oh, this is probably going to break to the downside. But look at what it did. And I'll tell you, I don't really have a reason for why the banks are acting this well. Sometimes it just is somebody's buying them. So I kind of view that, as we're going through what we are going through, which is a market dip, and sellers are in control right now. But I think there's some silver lining at the involved in this. And I think if you're patient, right, and letting the selling pressure, get out of the way, or get out of the way of the selling pressure, I don't think that this is going to be, and again, I will let price be, judge for me, but I think that we are seeing some positives. I'll leave it like that too. So, I think also when you look at what not Nvidia did today, but what Netflix did today, right, it's kind of setting the bar, it's resetting the bar a little bit low. Right. And I actually had a trade on for this on the short side because I just thought there's too many names. Like Netflix hadn't, I keep saying, sorry, I keep switching my the tickers between Netflix and Nvidia. I said it was a long week, but this is Netflix and breaking down, and it's just the fact that they're up too much, and you're going to find that from time to time with names that are reporting earnings. It's not going to matter so much in terms of what the numbers are. They just have to They have to have a blowout quarter in order for them to sustain that move up that they've had, right? And this is no longer a cheap company, right? When it was back in here, right, and it moved up on earnings, I think the PE was like a 20 in here. Now the PE is like a 30. So it's not a cheap stock by any means. And I think it was just ripe for a pullback. Unfortunately, I wasn't able to sell. I was looking for a really big winner. I had a put fly on. I was talking about that on Benzinga this morning, where I had the 580, 570, 560 put fly. And you need to really have um, the right target. Like the price has to go to the strike that you mentioned. So this actually sold off a little bit too much. So a little bit more than the market makers were anticipating for this stock. So down 9%. I think the implied move was about 7.5%, which lined up pretty well with this Virgin point of control. But I think it's better that this name sold off before all the big names report earnings next week, because it sets the bar a little bit lower, right? And now people are starting to worry more. So there's a little bit more fear in the market, which I view as a positive. All right. So that's Netflix. Nvidia, I might as well talk about that name too. But yes, this finally broke. I say finally because I didn't know for sure that this was going to break, but this is the market general. We saw the semis break earlier in the week. My view on this is this mean that like the world's going to end or that the market's going to crash? No, this is just a fact that this got a very popular overcrowded trade where everybody was in the semis, and that's what happens. And there's a lot of similarities, like there's a lot of things that rhyme in terms of the market over time. Now people have compared Nvidia to Cisco and that kind of thing. I'm not going to do that because I don't think that that's the right comparison, but this name corrects from time to time. And if you look back, if you go back years, especially what happened back in here, right, there's nothing wrong with the price action coming in a little bit. It's just it's normal, especially when you've had a parabolic move like this. Now, do I think that they're going to continue to make money and do well? Yeah, I do. But again, you have to be reasonable, and there is going to be competition for this company, right? Other companies don't want to keep forking over money to Nvidia. Some of them are going to want to make their own chips. So it's good that this company is coming back down to earth a little bit. All right. And but yeah, I mean, even so, after the market move today, which was like down over 10%, look at the weekly chart. It's still up a ton, right? So I saw a lot of people like, I'm going to go out and buy the dip. Okay, that's fine, but just have in the back of your mind that the stock is still up huge year to date. With the Q's only up 1.1%, I think this stock is still up leaps and bounds from there. So again, having that perspective, I think helps, right? That's one of the biggest mistakes that I see traders, investors make over the years. One of them is buying names in downtrends because they think that the name's on sale or something, which is completely off. Usually it's because the business has changed, right? There's a reason why why a stock has gotten into a downtrend trend. Something has changed with their business, right? The other mistake that one of the top mistakes that I see traders make is falling in love with names, right? And they become emotionally attached to names. Don't do that. Don't get emotionally attached to names. Like understand, of course, that it's a strong company and so on and so forth, and have the right time frame. But don't fall in love with companies because they do change over time, right? And unless you're the CEO of the company, then there's no reason to fall in love with the company, in my opinion, where you can actually have the impact where you're changing things at the company. All right, so let's move on. I mentioned a couple other bright spots. I mentioned AXP earlier, but I think this is, I was a bit surprised because, when the market is doing this correcting, it's tough for names to, after they've moved up a decent clip, which American Express has. But look at the move in this. Right. So again, like I view this as a positive with what's going on with the banks right now. Very nice price action. I also thought JP Morgan, it's been a few days since JP Morgan kind of sold off, but I don't think that their quarter was bad. I think it was just the fact that Jamie Dimon, he does that. If you listen to his earnings calls over the years, he's always kind of negative, right? But look at this move back inside the value area. So this is what we're going to want to see is names that have been beaten up. Kind of come back to life a little bit, right? And you should have a list of names, and there's no rush, by the way. Like this is one that I really like, and I tried Costco a week ago when it got back into the value area, and once it broke back out of the value area, that's it. I don't want it anymore because even though I love the company, right, and I'm not going to stay emotionally attached to the name until it starts to actually prove it to me. Like don't do the selling about why a company is so great. Let the price action sell you. And right now, it's not selling me on why I should be in the stock. Now, could it form some type of a double bottom? Sure. But I don't need to time the absolute bottom, right? That's for, people who are really insecure on Twitter, who will try to predict everything, right? And then they backpedal when they're wrong, or they just come up with another prediction, right? But ultimately, I want to see this get back above the 50-day moving average, right? That's the place for me because ultimately, I'm looking to be in this long term, and I want to see up and to the right. I don't want to see if it, and right now, if it doesn't hold here, then it's down here or down here, right? And that may end up being a buying opportunity, but I'm not buying it when it's going down. I'm buying it when it starts to go back up again, right? Again, just something that you learn over trading. Let me just recap this. I don't want to make this video much longer, but utilities, obviously, they had kind of a more risk-off feel. They were up as well as consumer staples. So again, these are not all the best leading areas that particularly I want to be in, but it's just this is the course of a correction where you see these things. Semis, by the way, we're down 9.7%, tech down 6%, biotech down 6% as well. Unfortunately, this biotech, this is something that, I had tried to be in this year, but look at it break down like this. So, this was the breakout. I'm on the daily chart, right? We can look at the weekly chart too, but I wanted this to hold in here, and it didn't, and it's a mess. So you look at how when it's red like this, when you're inside the value area like this is not where you want to be. So yeah, I think that's a disappointment, and we'll revisit biotech when it starts to act better. Finally, just a couple other things here. Aerospace and defense was positive for the week. So again, it wasn't a complete wash. There was some things that were acting better. And I think, really earnings season in general is a time that we want to be observing. We're going to be putting together our earnings watch list, strength list, right? And we might find some new areas of leadership. Have an open mind, right? And be able to observe, be objective, and pivot to those areas that are showing strength. All right, guys, that's all I have. If you want to be a member of Tribeca Trade Group, where do you go? You go to tribecatradegroup.com and you can get involved in our trading room. I would urge you to check it out, right? If you're struggling in this market, right? I've been through obviously a number of these corrections. I pointed out the one in 2020 just because it's really easy visually to understand when something's downtrending that you don't need to get involved until you get some confirmation, right? So be patient with what you're dealing with. And I hope to see you in the trading room, tribecatradegroup.com. Have a great weekend, everybody.